This program is brought to you by the Practicing Law Institute, a nonprofit learning organization dedicated to keeping attorneys, professionals, and accountants at the forefront of knowledge and expertise.
Robinhood is on a mission to democratize finance for all. In 2020, Robinhood co-founder Vlad Tenev told CNBC, "Our belief is the more we lower the barriers to entry, the more we level the playing field and allow people to invest their money at a younger age, the better off our economy will be, and the better off society will be, because we kind of live in the intersection of capitalism, democracy, and innovation. And I think it's a very interesting place to be." At the time, Robinhood was well on its way to becoming one of the most, if not the most, famous trading app. But that interview was before meme stock trading rattled the markets in January 2021, and before market structure issues became headline news. Vlad was right. Robinhood is at the intersection of capitalism, democracy, and innovation. It is a fascinating place to be, and it also happens to be a perfect topic for the Insecurities podcast. We're going to talk with the Deputy General Counsel at Robinhood Markets about all things Robinhood, meme stocks, going public, regulatory reform, and enforcement. It's all on the table today on Insecurities.
Hello, and welcome to the Insecurities Podcast, keeping it fresh and staying wonky on the latest securities, regulatory, and enforcement developments with a practitioner's perspective on the stories you should be following. As always, I'm Chris Eckimoff, and I'm here with my co-host, Kurt Wolf.
It's good to be with you, Chris. I'm excited for today's episode. You know, Robinhood is one of those topics that is always in the news. It has come up on a number of our podcast episodes. So it's exciting to actually have somebody from Robinhood come on today to talk about some of those issues that really seem to fascinate the public, or maybe just the investing public, certainly some of the so-called apes out there.
That's right.
So let's get into it. Why don't you kick us off with just a little bit of background on today's guest?
That's right. We are joined today by Lucas Moskowitz, a Vice President and Deputy General Counsel at Robinhood Markets. In that role, Lucas oversees litigation and government and regulatory affairs for Robinhood. He previously held several roles at the U.S. Securities and Exchange Commission, including as the agency's Chief of Staff under Chairman Jay Clayton and as a Senior Counsel in the Division of Enforcement. Lucas also previously served as Chief Investigative Counsel for the Senate Banking Committee and Counsel for the House Financial Services Committee. And before joining Robinhood, Lucas was a partner in the Securities Department at WilmerHale. Lucas, welcome to Insecurities.
Hey guys, thanks for having me. Great to be here.
All right, so if you're listening to this podcast, I have no doubt you know about Robinhood.
I'm wondering if there are any listeners out there, Kurt, who don't know what Robinhood is, but have listened to 54 episodes of our podcast today.
Right. But just in case we get the odd click through from somebody who's not sure what's going on, a quick rundown. We're going to do it as quick as we possibly can, so everybody knows where we are, what Robinhood is. All right, so Robinhood is an investing app. It's a place where investors can buy and sell stocks, ETFs, options, and now cryptocurrencies. And Robinhood, as I said, is on a mission to, quote, democratize finance for all, end quote. In recent years, Robinhood has become a major player. Time magazine reported this year that the investing app has 21 million customers and $100 billion in assets. And if those numbers don't impress you, Chris, it's worth noting too that for several weeks in 2021, Robinhood was the most downloaded app in the country, higher than even the mighty TikTok.
I am impressed, Kurt. I am impressed.
All right. Robinhood has been incredibly successful, at least in part because it pioneered commission-free trades of stocks, ETFs, and cryptocurrencies. Robinhood was founded on the belief that everyone should be welcome to participate in the financial system, and it's working to create a modern financial services platform for everyone, regardless of their wealth, income, or background. These themes are going to be important as we move forward, so I want to dig into those concepts just a little bit more. It really is at the core of what Robinhood is building. So for context, here's how Robinhood described its objectives in public disclosures. The stock market is widely recognized as one of the greatest wealth creators of the last century. But systemic barriers to investing, like expensive commissions, minimum balance requirements, and complicated jargon-filled paperwork, have dissuaded millions of people from feeling welcome or able to participate. Robinhood has set out to change this. We use technology to deliver a new way for people to interact with the financial system. We believe investing should be familiar and welcoming, with a simple design and an intuitive interface, so that customers are empowered to achieve their goals. We started with a revolutionary, bold brand and design, and the Robinhood app now makes investing approachable for millions. All right, so that is Robinhood in a nutshell. Don't know if I could have done it much faster than that, but like I said, if you're listening, I'm sure you know what it is. Chris, why don't I stop talking? Let's get to our guest.
Lucas, we want to talk more about kind of Robinhood's mission and business model. You know, everybody sees the feather right on the screen or gets the app, but talk to us a bit about Robinhood's customer base. You know, we're hearing a lot about the folks that are involved with Robinhood. Who are the people subscribing, signing up, and utilizing the platform?
Yeah, look, so you said it's 21, 22, about 22 million. We call them net funded accounts, right? Customers who have money on the platform and are active on the platform. So it's really cool to think about that, right? I don't know if I could have ever imagined a time when I was doing various jobs over the past several years in government or in the private sector, ever thinking about a mobile brokerage platform having 22 million customers. Our customers are really impressive, right? We've got about half of those are first-time investors, which is really an amazing thing. And I think objectively, despite all the noise we hear these days about retail investors, I think that's just objectively a really good thing. It's a good thing for the people who are getting involved in the markets, a good thing for the markets themselves, and a good thing, I think, for the economy as we think about how to continue to grow in this country and close the investing gap, close the wealth gap. In addition to that, the customers we have, a lot of them are starting younger. They're bringing smaller amounts of money onto the platform to start with. I think we have a median account size of about $250, and the average account's about $5,000. So compare that to kind of one of your incumbent brokerage firms, and it's going to be quite different in terms of the customer profile. Our customers are again starting out with lower amounts of money. They're building their portfolios over time. They're primarily trading stocks and ETFs, publicly traded, right? So, again, there's a lot of memes out there. You've got all these day traders piling into apps like Robinhood, and they're trading, constantly and taking inordinate risk. And the information and data that's available to us does not support that meme. As a matter of fact, it more supports the idea that customers are really in this for the long term on the whole. So again, our customers are largely trading stocks and ETFs. They're not typically in higher risk products. When we look at the numbers we see, I think the number's about 11% of our customers are trading options, and an even smaller amount. I think the last time I looked, it was closer to something around 2%. Trade the more complex, spread option strategies. So you think about the overall customer base, that's a fairly limited portion. The rest, again, are in stocks and ETFs. And I think we obviously, as we think about policymakers have been talking for decades about getting more retail into the market, getting more people invested in stocks and ETFs. I think that's happening on Robinhood. I think it's happening on other platforms too, and that's a really good thing. So I view this as a very, very positive development all around, and obviously hope it continues and it grows even more. So another note about our customers. So we actually do surveys, and we look at kind of the demographics of our customer base and who's using the product. And one of the things we see is that our customers are actually that they track are over-indexed with the U.S. population's demographic makeup. So when we look at our platform, we see more diverse investors than incumbent firms, which I think is a really, really good thing as well.
Lucas, you talked a little bit about how the platform is being utilized by more folks, and we really want to know, to align that with Robinhood's mission of making investing more accessible. What is the how there? What is Robinhood doing that's giving this access to more folks than had in the past? Is it just good branding and a reputation on Reddit, or is there some other blocking and tackling being done by Robinhood to reach out and make that an accessible investing environment?
Yeah, look, I think it goes back to what you guys were saying before when you read our mission statement and what we were trying to achieve, and Vlad's statements I think are really on point. Just take a look at the retail brokerage industry and retail investing before Robinhood came along. So you had a lot of firms taking payment for order flow, right, and they were charging commissions of $5 to $10 per trade, let's say, on top of that, right? If you're a customer and you want to place a $50 or $100 trade, which again a lot of people are doing these days, think about how significantly higher your investment has to grow in order to just make up that commission. On top of that, you had account minimums at a lot of places, right? So a brokerage or another platform is not going to take your account unless you have, let's say, $2,500 in it or $5,000 in it. That kept a lot of people out of the markets who didn't have that kind of money to even get started. And then, once you get, let's say you were fortunate enough to get on there, right? Let's say you actually had to go to a human broker at an office, right? At your branch office down the street. Let's say one was even available to you. You get in there, you start talking about stocks, and maybe your broker says, hey, I think you should buy Apple, right? Or I think you should buy Google or Berkshire Hathaway. Those stocks trade at thousands of dollars a share now. How am I going to, as an investor of modest means with maybe not a lot of experience, how am I going to get into those big stocks that we, of course, not those in particular, but these large cap stocks that a lot of people want retail investors to get into? Compare that to where we are now, right? We have, I think as a large part as a result of Robinhood really upending the industry, commissions have gone away. So now, no commission trading. Account minimums don't exist on Robinhood, right? We've pioneered that no commission, no account minimum model. So now you can get started with, $5, $1, whatever it is. It's easy to sign up for an account. You can get on there. You can place your first trade. You don't have to maintain a costly account minimum. You're not getting charged $5 to $10 to make that trade. And because of, I think more innovative products like fractional share trading, you can now get into these big name stocks and ETFs without having to pay the entire price per share. You can get it for $1 or $5 or $10. On Robinhood, which I think is really cool, you can set up a recurring investment, right? So let's say I want to put, $5 every week into those, few stocks or ETFs I own. You can do that now too. And then I think we've built on that, right? So look at, more and more products coming out the door, whether it's IPO access, things like our new trade recommendation product, again, which is, very, very low cost to do, and you don't need to call a human being up to get that trade recommendation. You're getting a recommendation, among four, basically low cost ETFs. So, I think that's when we talk about, providing access, we're talking about that. And I think about it and I think we at Robinhood think about this in three different buckets, right? You have the financial barriers. We talked about those: commissions, account minimums, fractional share trading that didn't exist before. That was a big issue that kept a lot of people out from the financial perspective. I think we've done a lot to address that. We'll continue to do more. Second one is educational. Maybe the average retail investor prior to Robinhood and other platforms coming on the scene didn't have that type of digestible and relatable content to help them educate themselves to make their own investment decisions. I think we've upended that too with products like Robinhood Learn, which is available to everybody, not just our customers, has over 650 articles on the websites visited by millions and millions of people. It's great educational content. We have snacks, the newsletter, podcast to kind of help you, learn more about what's going on in the market. I'm sure we'll talk about that more as we go on today. And then the third bucket is the emotional barriers, right? So again, think, prior to Robinhood, you were maybe going on a stodgy website and trying to figure out how to place a trade, or you're trying to go to a human being at your branch office. It can be intimidating. People these days want to conduct commerce and even invest on their phones. And so Robinhood just built just an amazingly, I think, intuitive, easy to use and accessible platform that everyone can understand and that everyone can use. And I think that's broken down a lot of emotional barriers that kept people out of the markets.
Yeah, it's helpful to hear about how, sort of removing barriers, educating people, making it easy and accessible, maybe even intuitive, helps you achieve your mission of democratizing finance. I know I've said it a few times now, but it's sort of like the theme that runs through Robinhood, I think, when you look at the app or when you look on the website. But I know you're also feeling pressure from any number of sources, internally and externally, whether that's investors, the news, regulators. I'm sure that creates challenges. So, I mean, how is Robinhood as an organization staying true to that mission? How do you continue to achieve those goals?
Yeah, I think it's continuing to break down more and more barriers, right? We've broken down a number of them across those three areas I talked about, economic, educational, and emotional. But there are barriers that still remain, both within the traditional equities markets, crypto, another area. And then, of course, there are other areas of finance that have, still legacy barriers in place that I think, will be addressed over time. And so, I think continuing to identify what is keeping people out of the markets and what's preventing them from investing and saving for their futures is what we need to continue to focus on and continue to break down those barriers. That's not just new products. That could be, new areas of the markets that have traditionally been, closed off for the average retail investor. Again, it goes back to education and the way that, our platform looks and feels, continuing to make sure that, we really have the best, offerings there too, so people feel really comfortable, putting their savings and hard-earned money to work, and that they feel as safe as possible doing it on our platform.
So I think at this point, we know an awful lot about Robinhood and what you all are doing over there to try to make investing easier for more people. But that doesn't necessarily tell us about you. And Lucas, we'd like to learn a little bit more about you while we've got you here. So tell us a bit about your background and your career. I know you've spent a lot of time in public service on the Hill and at the SEC. So, how did you find your way to Robinhood, and how does your experience inform the job that you're doing today?
Yeah, so I figured out pretty early on in college that I wasn't going to be a professional athlete. That was, of course, everyone's dream. It was mine. Didn't quite work out.
Same.
So, I actually did an investment banking internship when I was in college, and it was a lot of fun. My dad wanted me to do it as a career, and of course, what does any 19 or 20-year-old kid in college do when their dad wants them to do something? I slightly rebelled and said, no, I'm interested in politics and law, and I'm going to go do that. And so I went to law school down in this area in DC, and I ended up staying. I thought originally I was going to be a trial lawyer, then I was going to be an appellate lawyer, and that stuff was really interesting to me at the time. And right out of law school, I went to a big law firm here in DC, WilmerHale, where I ended up spending some time over the years. And it's a wonderful firm. I loved my time there. And when I was a young associate, I got put on a securities SEC investigation. And I loved it. It was like the intersection of business and law and policy. And it kind of just captured my attention and interest. And I never went back. So I spent just a little less than 2 years as a young associate at Wilmer, and thought I was going to, make a run at the law firm and be a lawyer at Wilmer for a while. And it just so happened that I got a great opportunity to go over to the SEC and be an enforcement lawyer. And so I jumped at that chance and spent a couple years in the enforcement division post-financial crisis. I had, fortunately, been introduced to a guy by the name of Dan Gallagher when I was at Wilmer. And we got working on some cases together. I don't know if y'all remember the Financial Crisis Inquiry Commission that was formed after the crash. And we did that together for a short period of time, but just really, really loved working for Dan. And when I got the opportunity to go over to the SEC, he gave me some great advice and helped me kind of get situated there. And we kept in touch, and as luck would have it, he was named commissioner a couple years later. And he called me up and said, "Hey, I've got a slot open as a counsel. Do you want to come up and do that for a little bit?" And of course, I jumped at the opportunity to do that. And I spent some time as a counsel to Dan, focusing largely on enforcement and a little bit of trading in markets, kind of capital markets, regulatory and policy issues for him. When that kind of was coming to a close, we talked a little bit, and I said, I'd love to go over and work on the Hill. It always kind of fascinated me, right? I got the business and the law side of it, but I never quite got the full policy side. And I was able to go over and do a couple years on the House Financial Services Committee on the Capital Markets Subcommittee. As just really lucky, great opportunities coming my way, and I just said I'm gonna jump at the next one. And the next one was going over to work for the Senate Banking Committee as an investigator. Did that for a year under Chairman Shelby. His time as chair ended up expiring, and so I was looking for the next thing, and reunited with Dan Gallagher again at a financial consulting firm that Paul Atkins, who was also another former SEC commissioner, started here, called Potomac Global Partners. And I did that for a year, and during that year, I actually got introduced by Dan to a guy by the name of Jay Clayton, who at the time was a partner up at Sullivan Cromwell in New York City. And just got to know him over the course of the year. Obviously a fantastic guy. And, he ended up being appointed as the chair of the Securities and Exchange Commission. And said to me, as we kind of talked more about what to expect, hey, do you want to come and be my chief of staff? And that was obviously a no-brainer. So that's how I ended up back again at the SEC for just under 2.5 years of Chairman Clayton's term, and just a great experience for me. So after that, I ended up going back to Wilmer again, and reuniting with that guy again, Dan Gallagher. He was leaving a pharmaceutical company where he was the chief legal officer, and we got to talking about what could be fun to do next, and we decided we would kind of go back to Wilmer, and he was going to take over the securities group there. He became the deputy under Bill McLucas, another legend of the securities enforcement bar. And so went back there and was having a blast. And of course, things changed yet again very quickly, much quicker than I thought. Dan got an offer to become the chief legal officer of Robinhood. That's a company that I had not heard of until I went to the SEC. It was just kind of coming on the scene at that point in time, right? This was a little bit pre-pandemic, but kind of getting closer, to the point where we were locked down, and obviously more retail investors got involved in the market. But it just sounded like a really fun opportunity. It's been quite, an interesting period of time for me.
I love the background and talking about all the professional experiences you've had. It's variegated, it's interesting, and it seems like you're pivoting a lot based on the markets and based on your career. It brings to mind a certain football coach who maybe didn't pivot so well on Saturday night against my Buffalo Bills. Lucas, is it true that you're a New England Patriots fan? And how do you feel today versus, I don't know, maybe 2-3 weeks ago?
So now everyone's going to hate me because, of course, I'm a Patriots fan. And look, I mean, there's only so many times you can win, right? So you kind of have to give other folks a chance.
Listen, if you need some help with the coverage at Robinhood, feel free to ring up Micah Hyde. You may remember his great interception on the Patriots' first drive that took away a touchdown and led the Bills on to their victory. So enough about background. We don't need to come to fisticuffs here in our remote environment, Lucas. But thanks for talking about your story and how you ended up at Robinhood. Now, when this episode airs, this will have been almost exactly 1 year since meme stock mania became part of our lexicon in the securities environment world. Markets have obviously been different. They've changed. A lot is probably never going to be the same again for good reasons, maybe some not so good. You'll recall during that period of wild volatility in all directions, Robinhood temporarily suspended trading in or purchases of the two leading meme stocks at the time, GameStop and AMC. Obviously, Kurt, we talked. Everybody who's heard this podcast at least once before is aware of the story. But Lucas, we're interested kind of on the inside take. What was it like being at Robinhood during that time period?
Yeah, look, I mean, obviously, a very unique thing for us as a company to go through, for the industry to go through. Certainly a number of our customers were not happy with the way things played out on January 28th, and we certainly understand that. Look, things were obviously moving very quickly that morning, that day, certainly even that week. We had a period, as you said, of unprecedented market volatility, right? I think it was called a 5 sigma event by one outlet. And so if you think back in the number of days in the market, that probably should have never happened, but it did. Look, I think we as a company, we're very, very focused on doing what we needed to do to manage risk, to make sure we obviously met our clearinghouse deposit requirements, and make sure obviously that our platform was available to the vast majority of our customers. Certainly when something like that happens, you're going to learn from it, and you're going to try to take out of it, the lessons you can to improve. And we certainly did that. You saw us raise a significant amount of additional capital. We were obviously, we were in compliance. We had excess net capital under SEC rules during that week leading up to January 28th. So, but we also, the company went out and raised additional funds. Again, we had been, engaged in an effort well before January 28th to continue to enhance our risk operations, our compliance operations. That's something obviously we doubled down on, after January 28th to make sure that, we're able to provide the best experience for our customers. Another thing we do that we did that I wouldn't say is necessarily, caused by January 28th, but, certainly a lot of investment at Robinhood in customer support. We have 24/7, live voice support now available through the app. And just another area where we're trying to listen to feedback, learn from, these events over the last several years and improve as much as we can.
So obviously a lot of change. I mean, whenever you're dealing with a 5 sigma event, I guess you're in a reactionary posture for some amount of time, right? But it's about how you, as you say, sort of learn and move forward. What are some of the permanent changes you would say to the way that Robinhood sort of delivers its products or services? What did you take away that have changed the way that you do business?
Yeah, again, I would say that there have been a lot of permanent changes that have happened since I've been here. I started at Robinhood back in July of 2020, and I saw it right away. These things, again, they were going back before January 28th, where, there's been obviously our CEO, our CLO and the rest of our executive team have really prioritized building out legal and compliance. Among many other areas of the company, that's been a big priority, right? So I saw that right when I came in the door. Obviously, it started with people like Dan Gallagher, but it's kind of continued on. We brought in 2 new chief compliance officers into the brokerage entities, Nora Moskowitz, who spent a number of years at Fidelity, Kelly Zagatis, another industry veteran, and continued to add the right people as we progressed here, and now have a new chief brokerage officer, a new head of risk, things like that. So obviously building the people, building the compliance systems, building out the legal department. When I started, we were a much smaller legal team than we are now today, and we're growing to meet the demands of the platform and of the growth. So, I think that is, one way that we've really tried to address the many challenges we've had and opportunities we've had over the last year and a half. I think focusing a radical focus on our customers, we talk about that, right? Continuing again to make sure that we have the products that they want, that help them access the markets, that they have those products delivered in as safe as a way as possible. Obviously, capital markets carry risk inherently, but we want to make sure we're a safety first company. We want to make sure we're doing what we can to provide as safe an experience as possible. And when customers come to our platform to invest, we have done a lot in terms of scaling our systems to handle the customer growth and market volatility that we've seen. Ton of investment there, and again, doubling down on things like customer support and education, really important. So I don't know if January 28th really fundamentally changed the way we look at our business, but I think it certainly reinforced what we were trying to do from the very beginning, at least since I've been here.
You talk a lot about, how you're approaching customers in the market and providing those services with your mission. How about the culture internally at Robinhood? Has there been kind of a shift at all in the way that the culture is being approached after that event, or how are things going generally from a cultural perspective?
It's one of the reasons that drew me to Robinhood was the culture. I think you have this unique combination of a Silicon Valley fintech company that is disrupting industries, I think, in really good ways. And you have the heavily regulated side of the business, which are the brokerage entities and obviously crypto entities regulated on different levels. And so, I think that culture from the start has been one of compliance, taking the regulations very seriously. Again, did a ton of work to enhance in those areas, get the right people on board, get the right systems and processes in place. But I think that compliance culture is extremely important. I think what you see out of these types of situations like January 28th is that, again, you're learning from these situations. You're becoming a better and a stronger company as a result of that. You don't want to have to go through events like that, of course, but I do think it's made us a stronger company, a company that's better able to deliver for the customer.
You talked a little bit about crypto, and I know you guys have rolled out fractional shares as well, some of the new programs and platforms that Robinhood's offering its customers. What do those changes mean for Robinhood investors?
Yeah, I think it means, in the existing lines of business, more opportunities to get involved in the markets, more tools available to customers, right? Whether it's self-directed customers or, for example, our new trade recommendation product, right? Where if you're a customer and you're getting started and you want a diversified portfolio of ETFs to get going, you can now get that at your fingertips on your app, and you're not paying a commission to get that recommendation. And it also, again, it means providing more access to more products, to more markets, and coupling that with the right education and the right tools so that folks can navigate these markets on their own and make informed choices that they think are right for them.
All right, we want to shift gears a little bit and talk a little bit about the regulatory environment in which Robinhood plays, and maybe about some potential reforms that could be on the horizon. As you know well, Lucas, there have been several congressional hearings, tons of speculation about potential regulatory reform that could impact Robinhood's business. I constantly say on this podcast and elsewhere, I think it's remarkable how some pretty technical, market structure issues have become like kitchen table topics over the last year. Yeah. It's incredible to hear the things that, like my buddies are talking about on golf trips. I'm like, man, that sounds like work. Can we go back to playing golf, please? But so we want to touch on a few of those things like settlement cycles, some things that were flagged in the SEC's GameStop report, these digital engagement practices or DEPs, sometimes known as gamification, just to get your take on some of the things that may be changing in the market. But let's start with T+0. And of course, by T+0, I am referring to the settlement cycle. It's one of the enduring topics that came out of the meme stock trading frenzy and sort of kicked off a much needed conversation about the settlement cycle for stock trading. The settlement cycle, of course, refers to the time between the trade date when an order is executed in the market and the settlement date when participants exchange cash for securities and a trade is considered final. Currently, most equities are on a 2-day settlement cycle known as T+2. That's trade date plus 2 days. There has been a push by some market participants, including the DTCC, which is a clearing agency, to move to a T+1 settlement cycle. But after some of the things that happened last January, Robinhood stated publicly that they would love to see the markets move to a T+0 settlement cycle. So, tell us a little bit about, Robinhood's thoughts on the settlement cycle and where things might be heading.
Well, I really hope you guys are not talking about the clearance and settlement cycle on your golf trips. But
not quite that in the
close.
weeds. Yeah.
Not that wonky yet.
Look, so I think January 28th exposed, what I think is an antiquated, somewhat antiquated system that we still have for clearing and settling trades. The settlement cycle obviously has been getting reduced, has been reduced over time by the SEC, right? It went from T5 to, I think, T3 to T2. It took us the better part of almost, 20 years, 1995 to, I think, 2017 to get down to T2. When we looked at what happened after January 28th, you can see that this T+2 cycle, it obviously it carries some risk, or introduces some risk into the system, because you have an extra period of time there before the trades are settled and the proceeds are distributed out to the customer. And so if you can mitigate that risk by reducing the settlement cycle, I think as you've seen, DTCC, the SEC, other market participants and observers have all agreed that that's a good thing, and we should aim for that. I just don't think it's in Robinhood's DNA to say, let's spend another, several years going from T2 to T1. T1 is certainly an improvement. I'm not going to sit here and say it isn't, but I think, we're a company that's used technology to disrupt industries for the better, and I think we believe that the technology is there to get us to a place that's better than T1, whether that's same-day settlement or eventually real-time settlement. And so that's why that's I think why we came out and pushed for T0 rather than something more modest.
Lucas, we also kind of want your reaction to that famous or infamous GameStop report from the commission back, I believe, in October. For those looking for a background on that, we actually had the opportunity to speak with the Healthy Markets Executive Director, Ty Galosh, good friend of the podcast, back on our episode that came out on November 4th. So to summarize, in November, the SEC published a staff report on equity and options market structure conditions in early 2021, which focused on the January 28th and January generally trading activity in GameStop, the most famous of those meme stocks, which the SEC notes. Because the meme stock episode raised several questions about market structure, the staff report provides an overview of the equity and options market structure that may impact individual investors. And as I'm sure all of you listeners out there heard on our episode about this, the report was kind of a nothing burger from everybody in the markets, specifically as it relates to Robinhood. It was kind of a mixed bag. It largely supported Robinhood's statements about factors that led it to suspend purchases of GameStop and other meme stocks, but also hinted at some potential regulatory changes or pending scrutiny that could impact Robinhood's platform. So, Lucas, what's your take on the GameStop report? How was it received, and how has Robinhood reacted in its wake?
Yeah, so I, as you know, being a former staffer at the SEC, I have a tremendous amount of respect for the staff over there and the staff in trading and markets. And I think, look, for the majority of the report, to me, it was pretty thoughtful, and it was, trying to be data driven. And I think that's what the SEC staff historically has done in these types of situations and will continue to do. And so I do have a lot of respect for the staff and the kind of the commission process to that ends up resulting in these types of reports. It'll come as no surprise to you that obviously disagree with a couple of the policy prescriptions in there. On the one hand, they raise things like the settlement cycle, which we talked about, and certainly they seem committed to doing that, and that's great. But there were also policy prescriptions raised concerning payment for order flow and gamification that I would argue had nothing to do with the events of January 28th, and largely our solutions in search of problems, and depending on where the commission comes out on this, could actually make the situation worse for retail investors. So look, at the end of the day, if folks want to say that report was a nothing burger, the true story that we now know about January 28th just isn't very sensational, right? It was, at least for Robinhood, and I think other firms had to take similar types of actions. We're trying to manage risk, and for us, obviously, meeting our clearinghouse deposit requirements. That's not for some people what they want to hear, right? Some people like the conspiracy theories and about collusion and things like that, and obviously I think in my read, the SEC report kind of debunks that and supports what we've said all along in terms of what happened that day.
Yeah, I mean, that seems to be the popular take, is that it did debunk some of those conspiracy theories about what was going on. And of course, that's good for Robinhood. The truth will out, and there it is. For us objective observers, it wasn't as exciting as it might have been, but I'm sure you all are just fine with that. Another topic we want to talk about from a sort of regulation or future regulation perspective is gamification. It's been something we've heard a lot about over the last, let's say, 3 to 6 months. It's another one we've talked about here on the podcast with Nebraska law professor James Tierney. He actually came back to talk to us about it on our New Year's Eve episode. We've heard a lot about it from Chair Gensler. He likes to refer to, gamification, or he likes to put gamification under a larger umbrella of digital engagement practices, and that includes things like so-called nudges on trading platforms. I think it's really unclear how Chair Gensler or the SEC is even thinking about this, whether they will or even could do anything in this space from a regulatory perspective. But it's undoubtedly on your radar at Robinhood. So, tell us, how is Robinhood thinking about or responding to the gamification issue?
So, we could have a whole 2-hour podcast on this and probably not run out of things to talk about. It's one of the more interesting policy debates that, in my mind, is going on right now. If your listeners are interested, we did a comment letter to the SEC where we laid out our arguments, which really are cautioning the SEC in this area concerning rulemaking in great detail. And so folks can take a look at that if they want to know exactly where we are in each one of these points with regard to digital engagement practices. But if you just step back and level set for a second, when I was on my way into the office today to do this podcast, I got an email from my credit card company, and there was exploding fireworks and confetti on the email, and it was telling me how many points I got that year. And for some reason, right, we don't hear a lot of chatter in the media and among policymakers about how terrible that is that I got that email, right? We're very focused on it in the brokerage space, but the reality is almost every industry now, at least every industry that communicates with their customers or offers products for sale via apps on mobile phones, incorporates a lot of the same things, if not the exact same things, that mobile first brokerage platforms are doing, whether it's the graphics or the way we communicate through apps, things like that. And so I think it's important not to lose that context when we think about a specific exercise in SEC policymaking with respect to digital engagement practices, or so-called gamification, that we're part of a much bigger ecosystem, a much bigger way of kind of interacting with customers and doing commerce these days. And the idea that and I'm not saying this is what the SEC is going to do, but the idea that we should get rid of it in the brokerage space, but keep it everywhere else, whether it's on your mobile banking platform or when you go to buy a car on an app, I think that just needs to be part of the discussion. And that's totally aside from the First Amendment issues that we've raised. But the other part that I think is really important to talk about in this is that I think gamification is not well defined, and I think our platform has I think been wrongly tagged with the characterization of gamifying investing. When I think about gamification, I think about things like leaderboards and competitions to trade and badges and things that are really geared towards how much are you trading, right? What's your level of activity?
Lucas, we're talking a lot about the past, right? Kind of the post-January 28th and where Robinhood is today, but we're also interested in your take, maybe your crystal ball here about what new regulations or guidance or potentially enforcement actions in the market do you think that the SEC may bring or may propose that could have an impact on Robinhood's business going forward?
Yeah, look, I mean, I think there's a couple of big areas that we all kind of know about already. One's market structure. Chair Gensler has talked about payment for order flow, talked about off exchange versus on exchange trading, competition or order by order competition, I think he refers to it as. And so, we're obviously expecting a rule proposal to come out of the commission in the near term that addresses those types of market structure issues. I wish I could tell you where it's going to go. I have no idea and couldn't really speculate. We're obviously going to, as a company, be very active in that process. We think that payment for order flow is actually a really good deal for customers. We just worked with two professors from MIT and one from University of Texas at Austin, and they put out a paper using market data that's publicly available, plus some of our own anonymized Robinhood trade data. And I think what they found is a really compelling case for payment for order flow. They found that on average, you get a better price if you go through a broker that has the payment for order flow model versus going on exchange for the same trade. They found that the price improvement that customers get as a result of that model at Robinhood alone, it was $8 billion over the last couple of years. If you add that onto the commission-free model that we pioneered, you can add another $16 billion and counting. It's a tremendous amount of money that's getting put back into the pockets of the retail investor. And so I would argue that the retail investor has it better today than ever, that we aren't seeing this extreme issue in the quality of our markets to justify, a very aggressive regulation here. I know we've heard the idea that the SEC could ban payment for order flow. I don't think there's a case to be made for that, but we'll see what happens. And obviously I personally have a lot of faith in the commission's rulemaking process, the APA process, and like I said, we'll be involved and kind of try to help make sure that any rulemaking is informed, that it has the data that the commission needs to do an economic analysis. Second area is crypto. I think on the policy side, obviously there's a lot of discussions around lack of clarity and kind of the need for more clarity. I don't know if that's going to change from a policy standpoint anytime soon. We've heard Chair Gensler say that firms that are trading digital asset securities should come in and register. Without I don't think we're trading digital asset securities, but we're having conversations with the SEC about how that would actually work. What does it mean to register as a crypto platform that could trade digital asset securities? And then obviously the enforcement angle is on everyone's mind, right? I think folks are. We've seen some enforcement cases recently. I think we're all expecting to see more. I couldn't tell you what those are going to be or who they're going to be against, but would expect the enforcement division to be active in crypto enforcement, and depending on how those cases could tell us a lot about the future direction of the regulation of crypto in this country.
Lucas, you touched on earlier one of the other pillars kind of Robinhood, and that relates to educating investors, not just providing more access and that democratization of the markets, but really giving them the opportunity. You referenced, I think, over 600 articles or blog posts about some of the issues that you deal with that are, quote, in plain English, end quote. Obviously, Lucas, I'm an accountant. I'm sure that Robinhood patterned this off of the AICPA's Center for Plain English Accounting. I'm sure you've read it cover to cover. Just a great, Kurt. I see you. You're obviously a big proponent.
That's right at all. Yeah. No, I that seems unlikely.
Okay.
Go on.
Yeah. So obviously, the plain English is important, both in accounting and for Robinhood. We'll leave it there. So, talk to us a bit about that critical part of Robinhood services and how that's viewed from your seat.
Yeah, I think I have that on my nightstand. No, like you're exactly right. I obviously, that idea of plain English that the AICPA is espousing there is really important when it comes to educating or helping customers educate themselves in the retail investing space. I think it's, obviously part of the fabric of Robinhood. It's core to everything we do when we think about either new products or improvements to existing products. We also think about how do we provide the right education to go along with that, right? So, something I think we do really effectively is in-app education. I think we'll get better and better at that. We're very focused on it. So, when you go into Robinhood now, there are modules that go from, the basics of what the stock market is, all the way up to, if you're a qualified options trader, you can get educational content around, options trading strategies. When you go from our first level options trading to our second level, there's a flow that kind of explains spread trades and things like that. So what you're seeing at Robinhood is it's getting integrated into the platform. It's available to the investor at key times in their investment journey, and it's being provided in a way that's what I think is more easily digestible. It's more relevant to the customer that's using our platform. We don't want to just throw up 100 videos that are 2 hours long explaining all the different concepts that get involved in investing. I think people obviously tune those out very quickly. So we are very focused on not just providing more education, but I think providing the right education delivered the right ways, right? Whether that's your ability to go on Robinhood Learn and read something that, is going to be not as technical maybe as other sites, but is going to do a great job of explaining the basics, through your journey in the app, where, you can get a tour of what different things mean in the app, different parts of the displays to the modules that I was talking about. So again, really, really fundamental to what we're trying to do.
And of course, the educational materials aren't limited to sort of written materials or things that are available on the app. You have a number of other resources. My favorite, of course, is Robinhood Snacks, your very own podcast. Snacks is digestible business news for you, according to the disclaimer. More on that in just a second. But talk to us a little bit about some of the other resources that are available to investors.
Yeah, I mean, Snacks is a really, I think, amazing product. So our newsletter is already one of the most widely consumed newsletters in the U.S. I think we had about 23 million unique readers in the third quarter of 2021, wow, which is just incredible. The podcast that the Snacks folks do was downloaded over 10 million times in that same quarter.
Same.
Yeah, same for us, right, Kurt? Yeah, everybody, just millions and billions, I think. Let me check the stats.
So I think they're really important products for us, right? The two guys that do them are really amazing, and they do a great job of kind of distilling this stuff down. The entire team does a great job of distilling all of these topics down so that it's digestible and you can kind of understand it, and obviously it's provided in a format that's today very relevant for people. I try to listen to it after I drop my 3.5-year-old off at preschool, and it's always,
I thought you were going to say
really
after you finish the Insecurities podcast, then you switch over to Robinhood Snacks.
That one I do before I bring.
Got it. Okay, good.
Yeah. Helps her fall asleep in the car. All right. So, I mean, I know that you are used to disclaimers. You've spent time on the Hill. You've spent time at the SEC, working in the chair's office, working in a commissioner's office. The concept of disclaimers has to be something you're very familiar with. And, we warned you that we were going to quiz you on the Robinhood Snacks podcast disclaimer, which, for those of you who haven't heard it, is a rap at the beginning of every episode.
Wild.
Do you know the lyrics to the disclaimer?
Well, first of all, nobody wants to hear me sing, let alone rap. But I think I know most of them. But I will say that the most impressive part is anybody who can rap a member of FINRA and SIPC should get a ton of credit. Yeah. That's like my favorite part every time. And I'm always thinking to myself, like, I would have never figured out how to do that. It sounds so easy, but I think it's not.
No, it's amazing. I mean, I actually have them in front of me. I'm not going to wrap it either. But, to weave in, we're not recommending any securities. It's not a research report or investment advice. It's brilliant. It's brilliant. So kudos to the team and whoever wrote those lyrics. It's pretty amazing.
I love it. All right, I think, Lucas, now's the time for our disclaimer. We are going to pepper you with some trivia questions or some gotchas all about that famous ne'er-do-well hero of old, Robin Hood. And it's important. We've had to do a lot of work on our show notes here to separate Robin Hood, one word, from Robin Hood, the surname and the proper name of this individual. So we're going to ask you a few questions here about Robin Hood generally. Kurt, I think you're up first.
Yeah, so obviously Robinhood, the app, its name comes from its mission to provide everyone with access to financial markets, not just the wealthy. There's a lot of symbolism in that name going back, as Chris suggested, to Robin Hood, which I think was originally a story that came around in the 15th century in England. Obviously, it was about this mythical character in Nottingham, or Nottingham, as we like to say here, who was robbing from the rich and giving to the poor. I always get stuck on that name because my wife actually worked in Nottingham for a while. So it's like, I have this transatlantic thing going on. But yeah, we want to get your opinion on some of the pop culture references to Robin Hood, some of the movies. I don't know if you like Errol Flynn going all the way back to 1938, or maybe it was Costner in 91. Could have been Cary Elwes in 1993, famous as one of the men in tights. But Chris, why don't you, let's kick it off. Let's hit him with a couple questions here.
I mean, do you have a favorite representation of Robin Hood out there right now, Lucas? Is it the Russell Crowe of, I think, 2018, right? I feel like they make a new Robin Hood movie every 4 or 5 years. So who's your favorite Robin Hood, Lucas?
It's probably going to be Costner. Mm-hmm. That was a little bit more my vintage. I didn't mind the Russell Crowe version, but I think it's got to be Costner. I know the guy that played it most recently, who was in The Kingsman, that one did not... That one did not resound with me at all.
No,
your opinion resonates with the ranking of IMDb results for Robin Hood movies in history. So you're pretty much on pace. Noting that there are 2 animated representations of Robin Hood in feature films. The first, I'm sure we all know, is that scoundrel of a fox from the Disney film of 1973. He and his band of woodland creatures help combat the Sheriff of Nottingham. Lucas, do you know the other animated appearance of Robin Hood and the Merry Men?
I do not.
It is the show-stealing and always memorable representation of them in the very famous Pixar animated movie Shrek. Robin and his band of men find Shrek and Fiona wandering through the forest, and Robin Hood obviously attempts to save the damsel in distress. His representation here is a bit more Norman, a little bit more French than maybe the traditional line is.
Monsieur Hood.
That's right. He goes by Monsieur Hood, and his theme song, and I'll do some lyrics here. I won't sing them, obviously, as the 3 of us need to avoid that on this podcast. But he says, "I steal from the rich and give to the needy. I take a small percentage, but I'm not greedy. I rescue pretty damsels. Man, I'm good. What a guy. Ha ha, Monsieur Hood." Great representation. Also, a little bit contrary to Robin Hood's brand in that he takes a wee percentage of what he takes. But again, that commission-free trading of Robin Hood, I think, flies in the face. So I expect you guys to have already written to Pixar to ask them to change that for you guys to make sure that's represented right.
We'll work on that. We'll get the lawyers involved.
Right after some of those more pressing comment letters in participations in the regulatory process. Kurt, I know we want to do a little bit of quotation game here as well. You obviously talked up front with Vlad Tenev's quote about Robin Hood a couple of years ago, which was pretty prescient at the time. So we're going to hit you with a few quotes here, Lucas, from famous Robin Hood movies. I'll kick it off with the first here. It goes like this. "Wait a minute. Robin Hood steals money from my pocket, forcing me to hurt the public, and they love him for it? That's it then. Cancel the kitchen scraps for lepers and orphans, no more merciful beheadings, and call off Christmas." Lucas, is that quote from the movie Prince of Thieves, Men in Tights, or Disney's Robin Hood?
I'm going to go with Men in Tights. Final answer.
Well, you should have phoned a friend because that is Alan Rickman as the Sheriff of Nottingham in The Prince of Thieves, your Kevin Costner's favorite movie.
I haven't seen that one since, what was it?
91?
Yeah, 91.
That's right. It's been a while.
All right, here we go. Round two. Here is the quote. Rob? That's a naughty word. We never rob. Just sort of borrow a bit from those who can afford it. All right, same options. Men in Tights, Prince of Thieves, or the Disney version?
I'm going to go with I'm going to go with Prince of Thieves again.
Oh, it's the Disney version, unfortunately.
I would not have guessed.
Robin's having a conversation with Little John about why they do what they do. Little John's a little confused because he's saying, isn't it bad to take from them? And he says, it's not so bad.
My guess is that the Robinhood onboarding package when you started in July of 2020, Lucas, did not include famous references to Robinhood, as you're 0 for 2 here.
Yeah, you're going to have to call HR right after you get the lawyers on the comment letter to pick.
We don't do a ton of Robinhood movie trivia. There's a lot of movie trivia, but not a Robinhood movie.
Well, we'll hit you with the final one. I'm sure you're going to get it. Just the nature and the tone will belie where it's from. Robin of Locksley? I've just come from Maid Marian, the woman whose heart you've stolen, you Prince of Thieves, you. I knew her parents before they were taken in the plague, Lord and Lady... Lord and Lady Bagel. You know, you two were made for each other. I mean, what a combination. Locksley and Bagel. It can't miss.
So, this is one of the standardized tests, right? Where if you just select the same one every time, invariably you get some of them right.
Yeah, exactly.
So, you guys know what I'm going to go with.
Well, that is the famous Mel Brooks playing Rabbi Tuckman in Robin Hood, Men in Tights, Locksley and Bagel coming together. I mean, a can't miss combination.
All right. Well, we appreciate you having a little fun with us here at the end, Lucas. You can feel free to take those questions back to your colleagues, spread them around at the next, Robinhood Zoom happy hour, whatever you need to do. But it's been great to have you. Appreciate all your insights, and thanks for coming on the show.
Appreciate you guys for having me. Thanks a lot.
Thanks for joining us for this episode of the Insecurities Podcast. And a special thanks to our guest, Lucas Moskowitz of Robinhood. As always, we want to hear from you regarding your thoughts, comments, and topics for discussion on future episodes of Insecurities. Please use the hashtag InsecuritiesPod on Twitter or LinkedIn to join the conversation. You can find me at EcomoffCPA.
And I'm at Enforce_update.
Be sure to subscribe, rate, and review the Insecurities Podcast wherever you listen. Be well, everyone, and we'll see you next time.
Thanks for tuning in.
Thanks for listening to Insecurities, a podcast from PLI, the Practicing Law Institute. PLI is a nonprofit provider of authoritative professional services training and continuing education. In an increasingly complex business environment where intricate corporate structures reign, Insecurities can help you make sense of it all. A special thanks goes to the producer of Insecurities, Daniel Peinitz, as well as hosts Chris Ecomoff and Kurt Wolf. For more information about PLI's SEC Institute, or to view hundreds of hours of fresh and relevant on-demand programming covering changes within the securities sector, visit pli.edu/membership and sign up for a privileged membership. These recorded materials are designed for educational purposes only. This podcast does not constitute legal, audit, tax, consulting, business, financial, investment, or other professional advice, and it does not create an attorney-client relationship. Please consult a qualified professional advisor before taking any action based on the information herein. Furthermore, the views and opinions expressed in this podcast are solely those of the individual participants. These views are not the views of the hosts or their employers. Users of this podcast may save and use the podcast only for personal or other non-commercial educational purposes. No other use, including without limitation, reproduction, retransmission, or editing of this podcast may be made without the prior written permission from PLI.